In this video, we're going to take a look at where the consensus EPS estimate for Netflix stands relative to the guidance that management gave last quarter. To do this, we're going to take the shareholder letter from the second quarter release, and you can see that on the first page, management gives guidance on a number of different metrics. We're going to take those metrics, input those values into our Netflix earnings model on the right, and then see what the resulting EPS number is and compare that to consensus, just to give us a feel for where analysts stand relative to that guidance going into Wednesday's release. Now, if you want an overview of this model, please visit our website, gutenbergresearch.com. You'll find a demonstration video, and you'll also, on the Models in Focus tab, you'll see a one page that summarizes the entire model, shows all the different items that you can input, where we put guidance, comments, how the segment details are interrelated with the income statement, the balance sheet, and the cash flow statement, and a brief description of how our multiple valuation and discounted cash flow valuation approach works. There's also a video that walks through the full model, so if you'd like any of the details, please visit the website. So going back to the shareholder letter, we'll put this on the left-hand side of the screen, and in the model, we're going to freeze the frames here, and then we're really only concerned with the September quarter since that's what's getting released on Wednesday. So just for the sake of this video, we're going to focus on this column. So the top section is the income statement, but if we scroll down, you can see we reach the segment details. So in the model, we start with domestic streaming. So let's start with domestic streaming in the shareholder letter. And you can see that for revenue, management is expecting just over $1 billion, so $1,069 million, and that's what we have in our model here. And also the model is color-coded, so you can see that we've already calibrated it to meet management's guidance in this case. They also guide total paid domestic members, so we have 42.51 million, and they guide the contribution margin of 32.6%. So we have our domestic streaming details all straightened out in the model. Next, we'll go down to international. That's this section here. And they give similar details, so revenue, 524 million. Paid members, 24.1 million. And contribution margin of negative 14.7%, which is expected given the amount of spending that they're doing on marketing in overseas new international markets. Now, the one question is what's going to happen with DVDs. So obviously DVDs is sort of a business that's in runoff, and it doesn't contribute a whole lot to earnings. So we've kept the ratios consistent with what we've seen in the past for the third quarter. And that would result in total revenue of 157 million. So no big change there, and no additional guidance from management on that one. What else do they guide? So operating income of 81 million. So for that, we can scroll back up to the income statement, and you can see that we have operating income of 81 million in the model, net income of 31 million, and EPS of 7 cents. So that's diluted GAAP EPS. So on a non-GAAP EPS basis, the street is looking for 8 cents, and once we plug all those estimates in and we keep some basic assumptions for diluted net share, so we're keeping it consistent with the previous quarter, then we end up with that same 8%. So going into earnings on Wednesday, the consensus estimate is actually in line with management's guidance. Be sure to check out our website and download this model. Once the new results come out, you can pop in the actuals for September quarter and recalibrate the model for December for the new guidance that management gives, and it'll automatically update the earnings for the future periods, and it'll also update the values, so you'll know right away in after hours if the price movement makes sense or not. Thanks for watching.